Today we will be discussing the basics on pivot points, how to calculate them, and how to use them in your day-to-day trading. First of all, what are pivot points? As a technical analysis indicator, a pivot point uses a previous daily high, low, and the closing price for a specific period to define future support and resistance areas. In addition, other small calculations determine the outside points. The levels you see in front of you represented on the chart is what we call the pivot points. We use R1, R2, and R3 to represent the resistance, as well as S1, S2, S3 to represent the supports. In the middle we have the main pivot point. There are multiple ways of getting pivot points. In this video we will be covering the standard calculations for pivot points. We also get the Woody's pivot points, Camarilla pivot points, Fibonacci pivot points, and the Demark pivot points. Each of these pivot points have different calculations, but all of them have the same principles: one pivot point and multiple support and resistance areas. How to calculate the main pivot point? In order to get the main pivot point, you need the previous daily high, low, and the closing price. Below we have the calculation to determine the main pivot points by using the high, the low, and the close of the previous day. You add them together and you divide that number by 3 to get your pivot point for the day. It is very important to get the correct calculation for the main pivot points, otherwise your support and resistance levels will be incorrect. Over here we have a US30 daily chart. In order to get the main pivot point, we need the previous day's data. This is the candle we are trading in today. The candle to your left is the candle from yesterday. If we look at the bottom right corner, there will be values popping up as soon as you hover over a certain candle. We need the high, which is represented as an H, that is 35495.0, the low, which is represented as an L, that is 35202.2, and the close, which is represented through showing a C, that is 35234.7. You add those three numbers up together, you get a single value from that, and you divide that by 3 to get your main pivot point. These are the calculations we need to determine the support and resistance areas. Each and every one of these calculations require the main pivot point. That's why it is very important to get the main pivot point calculation right the first time, otherwise these levels will not be correct. Why we use daily pivot points? The daily pivot points are one of the most accurate pivot point levels because they incorporate the end of day closing prices. The close of the day is regarded as the most important price of all open, high, low, and closing prices. The closing price is basically the settlement price that shows who won the bull-bear battle. Daily pivot points are more reliable than intraday pivot points. There are two main ways of trading pivot points. Number one being breakouts. Breakout usually happens early in the morning, depends on if the pivots are being calculated with weekly high, low, and close or daily high, low, and close. Break above the resistance 1, we know that the trend is up, so we chase the resistance 2 level. In this time, we only try and stick to triggers for long positions because the market is bullish above the pivot point and the resistance 1. By trading breakouts, you must have a good stop loss placement. If price breaks above the resistance 2, we put the stop halfway between the R1 and the R2. Number 2 being a rejection, or in other words a bounce. If during the day the market has established a strong bias above or below the central pivot point, we should expect any retest of the central pivot point to provide a rejection. Let's assume the market traded above the central pivot point for most part of the day. Maybe a piece of bad news hits the market and the price starts to fall and retest the central pivot point. At this point, we would expect the buyers to show up again and defend their positions in the market. So if the buyers were really in control, we can expect a bounce.